The Life Mindset channel greets everyone. You now have fewer than 6 months to prepare for what lies ahead. The worst part has already passed. The US stock market is about to experience massive swings. After it faces destruction, it will see a resurgence. Despite all the negative news, nothing will stop the powerful recovery and market surge that's coming. If you don't take the opportunity to invest in the US stock market right now, you will miss your chance to rise to a higher class in the coming decade. No matter how hard you try, your wealth will not experience substantial growth. That's the reality. Welcome and hello. And hello. Have you noticed that while everyone claims the US economy is in recession and the stock market has been plummeting for over 10 days, the Federal Reserve Fed only just made a statement? But instead of reducing interest rates to make borrowing and investment easier and save the stock market, they've taken more aggressive actions and warned the world that inflation in the US could worsen. This means if you're doing business in the US, your costs will keep rising. If you're living in the US, the cost of goods will continue to climb, and the US GDP will no longer grow as it once did. People will spend and invest less. In short, making money will become more challenging while prices keep rising. This is an economic paradox. When faced with such a risky future, if you had to place a bet on whether the US stock market will rise or fall, most people would probably bet on a decline, right? However, as soon as the market opened, the US stock market unexpectedly surged. This indicates that most people are rushing to buy, regardless of the price. But why is that? While most people remain indifferent to the situation, few are aware that the Indonesian stock market has collapsed, and Turkey's stock market is in a severe crisis. This means that the traps set by American capitalists in previous years are now beginning to explode one by one. So, who will be the next victim? Previously, when the Fed raised interest rates, American capitalists had already gathered assets from Japan, South Korea, and Europe. Now that these markets are recovering, it means the bottoming out phase has been completed. The assets at the bottom will soon see explosive growth, while the previously growing assets will quickly collapse. The most profitable investment trend for 2025 has already emerged. But what does this mean? When investing, we make money by buying assets, but we also win or lose based on the timing of our purchase or sale, or the preparation process beforehand. Think of it like a race. If you win, is it because you ran faster for just a few seconds or minutes? Why was the state of Qin able to conquer the 6 other states during the Warring States period? Why did Bai Qi become the undefeated general, known as the war god? Was it because he rushed into battle and only decided to win at that moment? I'll tell you, every victory or loss in life comes from careful planning, strategy, and preparation. This is true for exams, love, and investments. If you only decide whether to make money when selling an asset, you're not investing, you're gambling. When faced with such a risky future, if you had to place a bet on whether the US stock market will rise or fall, most people would probably bet on a decline, right? However, as soon as the market opened, the US stock market unexpectedly surged. This indicates that most people are rushing to buy, regardless of the price. But why is that? While most people remain indifferent to the situation, few are aware that the Indonesian stock market has collapsed and Turkey's stock market is in a severe crisis. This means that the traps set by American capitalists in previous years are now beginning to explode one by one. So, who will be the next victim? Previously, when the Fed raised interest rates, American capitalists had already gathered assets from Japan, South Korea, and Europe. Now that these markets are recovering, it means the bottoming out phase has been completed. The assets at the bottom will soon see explosive growth, while the previously growing assets will quickly collapse. The most profitable investment trend for 2025 has already emerged. But what does this mean? When investing, we make money by buying assets, but we also win or lose based on the timing of our purchase or sale, or the preparation process beforehand. Think of it like a race. If you win, is it because you ran faster for just a few seconds or minutes? Why was the state of Qin able to conquer the 6 other states during the Warring States period? Why did Bai Qi become the undefeated general, known as the war god? Was it because he rushed into battle and only decided to win at that moment? I'll tell you, every victory or loss in life comes from careful planning, strategy, and preparation. This is true for exams, love, and investments. If you only decide whether to make money when selling an asset, you're not investing, you're gambling. If your profits depend on praying to the gods or how sincerely you pray, that's not investing. It's simply gambling. Real entrepreneurs and investors always plan to win before entering the game. They only engage in the battle when they're certain of victory. Even better, they aim to make money without spending a dime, allowing others to make money for them. If they sense they can't win, they stop immediately and even retreat. So if you don't realize that the capitalists' plan has entered the harvest phase, whether you buy US stocks, short sell, or invest in US bonds, you'll lose money. As I mentioned in the previous video, if you don't want to fall victim to this harvest and still wish to rise to a higher class, follow my channel. I'll continue providing you with essential information. If you're worried you'll forget after listening and waste your time, just hit the like button and the video will automatically be saved to your playlist. This way, you can rewatch it anytime and stay on track with the plan. First, everything that needed to collapse worldwide has already done so. American capitalists have almost bought all the assets they need. This means the shearing phase is over. The next phase is to help the sheep regrow their wool quickly. What do I mean by that? Before I explain this plan, many of you may not believe it, and I understand that. But now, everything is unfolding as predicted, and history is repeating itself. If you missed the chance to make money in the first round, will you continue to miss the second one? What was the purpose of the Fed and the capitalists raising interest rates? Let's imagine you're in Europe, holding 100 million euros. European banks offer only a 1% annual interest rate, which means you'd earn 1 million euros in interest each year just by depositing your money in the bank. But now, with the Fed raising interest rates, you can exchange your 100 million euros for US dollars and deposit it in a US bank that offers a 5% interest rate. That's $5 million in interest, 5 times more than what you'd earn in Europe. What would you do? Of course, you'd sell your euros, convert them to dollars, and deposit them in a US bank. As a result, the US dollar becomes stronger, while other currencies around the world lose value. When the whole world sends money to US banks, what will American capitalists do? They'll use the increased value of the US dollar to purchase undervalued assets and currencies worldwide. This is why last year, the Japanese yen, South Korean won, euro, and many other currencies in Asia and Europe lost significant value. For example, previously, to buy an asset in Europe, I would need to spend $1 million. But now, due to the euro's depreciation, I only need $700,000 to buy the same asset. This is like buying at a 30% discount. Last year, many companies in Asia and Europe were acquired by American capitalists, with business owners and shareholders gradually being replaced by American owners. In other words, no matter how hard Asians or Europeans work, the wealth they generate will ultimately flow into the pockets of American capitalists. What if your country's economy isn't well developed, lacks significant capital, or doesn't have major companies to acquire? Don't worry, natural resources can still be leveraged. Take Turkey, for instance, a nation abundant in resources like oil and natural gas. In ancient times, if someone wanted to take control of another country's resources, they had to go to war. Today, however, this process is far more refined. When Turkey was struggling financially, I could offer them a loan, appearing to assist them. However, the condition is that I'd be concerned they may not be able to repay the loan, so they would have to offer some of their assets as collateral. If they fail to repay, those assets will become mine. But this won't be an issue because they won't reach the point of default thanks to the low-interest loan I've provided. When the due date arrives and they can't pay, they can simply borrow more to settle the old debt. Back in 2003, Turkey still had over $23 billion in debt, but took on an additional $16 billion. To secure this loan, they had to pledge vital national assets, such as energy, transportation, and banks, to American capitalists. This plan was set in motion back then and has continued to develop ever since. This situation evolved until last year when the Federal Reserve raised interest rates. The interest on Turkey's short-term debts instantly doubled. Since these debts were short-term, they needed to be repaid within a few months to a year. When repayment became impossible, Turkey had to pledge its national resources as collateral. As a result, Turkey's oil and gas resources were seized by Western capitalists, and the price of gas for Turkish citizens was fully controlled by Western financial elites. Additionally, Turkey's rare earth mines, minerals, and banks were sold at bargain prices to American investors. A similar situation unfolded in Indonesia and Japan. For instance, Indonesia holds the largest nickel reserves in the world, and nickel is a critical material in battery production. When the Fed raised interest rates, Indonesia's currency, the rupiah, quickly depreciated, presenting an opportunity for American capitalists to use the stronger US dollar to acquire Indonesia's nickel mines. This means the future supply of nickel for Tesla's batteries has already been secured. Why do American capitalists have so much money to buy up global assets? Because US stocks surged last year. As I've mentioned before, when currencies worldwide lost value and the global economy weakened, asset values everywhere declined, but the cost of living remained high. Particularly after the war broke out in Europe, disrupting the region's energy supply, global capital flows were directed into the US, a country with the most stable economy. Since 2020, the US government has coordinated with capitalists to create a situation where the US could print money and spend it globally. This allowed other countries to earn US dollars and stimulate their economies, while the assets owned by capitalists in these countries increased in value. However, after the pandemic, many people had to work from home, and American companies became even more prosperous. This was largely due to the substantial subsidies injected into them by the US government in 2020. When the Fed increased the money supply, American companies seized the opportunity to borrow a massive amount of money at near zero interest rates. What did they do with this money? First, they used it to buy back their own stocks, which boosted their stock prices. Second, they collaborated with one another to enhance their financial reports. The US government provided money to businesses, which in turn bought products from other businesses, and vice versa. This created a cycle where everyone experienced high revenues, increased profits, and paid taxes back to the government. In this way, the money injected by the government didn't vanish. It circulated back into the government. When American companies posted impressive business results, it attracted global capital, flowing into US stocks. With all this money, companies then used the funds to repay debts to the government. At this point, the US government had funds to pay off its debts while helping American capitalists attract international capital. These capitalists, with their strengthened US dollar holdings, continued to purchase undervalued global assets and resources. Many believe that when interest rates rise, borrowing becomes difficult, leading to a slowdown in business and investment and a decline in the stock market. But in reality, the opposite occurred. The rise in interest rates actually directed global capital flows into US stocks, allowing capitalists to make huge profits while the US stock market boomed. Major investors like Warren Buffett reaped the greatest rewards. They sold their stocks at high prices, accumulated vast amounts of cash, and then invested that money in US government bonds to earn high interest, all while continuing to buy up assets in Japan, Asia, and Europe. So, if you rely solely on economic theories and hastily sell your stocks when interest rates rise, you will miss out on the massive rally in the US stock market from last year. But here's the issue. The US president has changed, which means whether the next step will happen or not now depends on negotiations. It's clear that the US Treasury is running out of funds in the coming months, and the US government might have to shut down. So, what will they do? As I've explained in previous videos, the US government will likely create a recession to make US stocks crash, causing money to flow out of stocks and into US government bonds. At that point, money from around the world will exit the stock market and flow back into US bonds, right back into the hands of the US government. But what's happening now? According to recent reports from US banks, the money isn't flowing into US bonds. Instead, it's flowing into Europe and the UK. If you look at the US dollar index, it has sharply decreased since the beginning of this year, meaning the dollar is losing value against the euro, yen, and other currencies. Why? Because people are selling dollars to buy euros and yen. This indicates that the current US government is trying to create a recession and force the stock market to collapse, so money will move into US bonds. They continuously emphasize that US bond interest rates are at their highest, and if you don't buy now, you might miss out on these rates. And what about the American capitalists? They also want a recession, but with a different goal. While the US government wants money to flow into bonds, the capitalists want to redirect that money into assets in Europe, Japan, and other regions where they've already purchased assets at low prices. Why is this? Pay attention to this. Many people focus only on American capitalists and forget that their origins lie in Europe. In other words, before the US became the world's superpower, Europe and Britain were the dominant forces. These European financial elites have long accumulated massive wealth and have deep-rooted connections in Europe. We can refer to them as the European Financial Alliance. These financial elites were deeply embedded in Europe, but when the US rose as a superpower, they gradually shifted their operations to the US. This is why American capitalists can easily manipulate Europe. They never truly left. They merely moved their operations across the Atlantic. For them, national borders don't matter. No one says that if I'm born in Vietnam, my entire family has to stay there forever. The concept of nationality doesn't apply to capitalists. The only thing that matters is maximizing profits. These European financial elites supported previous US administrations because they championed globalization. Simply put, the US printed money and spent it globally, allowing other countries to earn dollars and stimulate their economies. Meanwhile, the assets owned by the elites in those countries appreciated. But now, the current administration follows an isolationist policy, causing conflicts with the rest of the world and imposing tariffs that compel other countries to move their factories, shipping, and technologies back to the US. In simple terms, previously, globalization meant other countries worked hard while the US just printed money and spent it. The money then flowed back into the US, enriching American capitalists. But now, the situation has shifted. In the past, the US printed money and spent it, while capitalists reaped the benefits. Now, however, the current administration wants to produce, earn, and consume domestically without allowing international financial conglomerates to control everything. Simply put, before, the US acted like a parasite, sucking resources from other countries. Now, the new government is seeking to push back against these financial oligarchs. But now, the situation has changed. Previously, the US printed money and spent it while capitalists benefited. However, the current administration aims to produce, earn, and consume domestically without allowing international financial conglomerates to control everything. In simple terms, the US once acted like a parasite, drawing resources from other countries. Now, the new government is determined to push back against these financial oligarchs. That's why Warren Buffett isn't investing more in European assets, like other financial conglomerates, but is instead increasing his investments in the Japanese yen and Japanese stocks. Buffett is a true American capitalist, while Europe has long been divided among European capitalists. In other words, his influence in Europe isn't as strong, and he can't invest in gold either. Gold is an asset held by governments around the world as an alternative to the US dollar. If he were to invest in gold, it would devalue the dollar. Japan presents a different situation. Many people borrowed money from Japan to invest in the US, but when the US economy crashes, that money will flow back into Japan. Buffett recognized this early and acted by heavily investing in Japan. Not only that, but when assets in Japan were being sold at low prices, he borrowed money in Japan to buy them. With this strategy, Buffett became one of the top 5 investors in Japan. In other words, the money Japanese people are making is flowing into his pockets as well. All of this has been discussed in previous videos. So, what's the key takeaway from all of this? When investing, we must focus on opportunities with a high probability of success. The most important thing is understanding where the big money is flowing. Whether it's the capitalists or the government, they both benefit when the US stock market crashes. However, if you pay close attention, you'll notice that Buffett's funds and European financial conglomerates haven't poured money into US stocks to catch the bottom. Instead, they are investing in assets in Europe and Japan. So why has the US stock market surged this time? If you examine the US stock market index and the overall market, you'll quickly see that before the surge, there was a rebalancing of derivatives contracts, which explains the large trading volume. However, it doesn't provide much meaningful insight. The key point is that on the day the market surged, the actual trading volume wasn't particularly high. This suggests that while many people were buying aggressively without concern for the price, the actual number of investors participating wasn't that large. Morgan Stanley also conducted a survey and found that in the past week, individual investors had poured more than $12 billion into US stocks. Moreover, if you pay attention, you'll see that a significant number of individual Chinese investors have been buying ETFs that track the US stock index, such as the S&P 500 ETF from Chase Securities, which has seen its price surge to the maximum, causing trading to halt. So, why are small investors flocking to buy US stocks? Normally, when the US stock market drops by 10%, there's a short-term recovery. However, for investors like us, if the big money hasn't truly entered the market and only small investors are buying, then whether you buy or short sell, the odds of losing money in this market remain very high. This time, if the market only recovers slightly due to retail investors buying in, the profits made will be limited because the recovery margin won't be substantial. If, after the recovery ends, you haven't made enough money and fail to exit in time, then when the market crashes again, you'll be stuck with assets purchased at a high price. Why is short selling also risky? Because entering the market too early can lead to losses. Right now, the US economy is still in a precarious position, and you can't predict exactly when the market will truly collapse. If you short sell too early, even a small recovery can force you to cut your losses. If you're using leverage, you could even risk losing your entire account. That's why short selling is much harder than buying in. Only when we're certain that the US stock market has entered a bear market, and it will continue to decline for an extended period, should we consider this strategy. But even then, I would say we should only consider it because we might still choose to invest in other assets, like gold. Since the second half of last year, I've started converting a significant portion of my US dollars into Japanese yen, as I frequently travel to Japan and see the risk of the US dollar losing value. If you didn't invest in any assets during the first half of this cycle, it's not too late. As long as you hold cash in defensive currencies, when the US dollar depreciates, those currencies will increase in value and help protect your wealth. Our ultimate goal is to wait for the Fed to expand its balance sheet and start printing money again. Before that happens, if the US stock market crashes, it will present the greatest buying opportunity of our lives. Many people have said, I've been warned about the US stock market crashing many times. But so far, it has only dropped sharply, not fully collapsed. So when will it happen? I don't have a crystal ball, and I don't possess supernatural powers to know the exact date when things will happen. If anyone tells me they know the exact day, I wouldn't believe them. However, as investors and entrepreneurs, we don't need to predict the specific time. What's important is to bet on scenarios with a high probability of happening. If this scenario comes to fruition, we want to be among the winners. If it doesn't, we won't suffer significant losses. At worst, we just won't make as much money. In principle, Warren Buffett and we, the small investors, may have different strategies, but in reality, our investment mindset is quite similar. So, are our predictions accurate? How will we adjust our investment portfolios in the coming period? Due to time constraints, I'll conclude the video here. I share knowledge on wealth, business, and investment to achieve financial freedom. If you don't want to miss out, be sure to follow my channel, turn on notifications, and share this video. I sincerely wish that those who have liked this video will soon achieve financial freedom. As long as you find one or two pieces of advice in this video that can help improve your life, I will be satisfied.